let's get into it. So you might be wondering who we are. Well, we're Traders Circle and we're Emerald Financial. There's a lot of familiar names that I recognize on at the moment. So you guys are obviously very aware of who we are. But if you're joining us for the first time tonight, welcome. Please keep up to date with all our other webcasts that we run. We run some on beginners webcasts. We run some on stocks. We do like a trade group type of thing every now and then. And obviously tonight we're focusing on options. But we're Traders Circle. Now, Traders Circle is more focused on the trading side of things. We've been around for over 15 years, and really we're traders who want to support other traders. Now, we don't want to trade for you. Instead, we want to be able to teach you so that you're self-sufficient, and we want to support you in your pursuits. So we want to help you keep on top of your positions. We want to give you trade ideas. We want to help you price up strategies. Right, we want to help educate you, and we really want to be able to develop a long-term relationship with you, so that hopefully, as you turn a profit, you continue to trade through us, you continue to use our services, and we can build a long-term relationship with you. Emerald Financial is very similar. It's our sister company. We focus a lot more on longer-term pursuits, like longer-term investing, medium to long-term investing, looking at fundamental analysis, looking at different stock scorings, looking at overseas markets as well. It's our clients aren't necessarily about doing one or the other, not necessarily just traders or just investors. Some people like to dip into both. We strongly suggest that you look at the financial health of your future, looking at investing, looking at long-term planning, and that's a lot more to do with Emerald Financial. But if you do have an interest in shorter term trading where you're perhaps interested in generating an income stream, and that's something that you can see yourself doing, then Traders Circle is also a company that's right for you as well. So tonight we are coming from Traders Circle. We are talking about more shorter term styles of trading, okay? If you do want to find out a bit more about both of those companies or Emerald Financial, then get in contact with us and we'll send you some information. Tonight, I should say, not today, tonight, we're going to run through options and option strategies. We're going to go through the market, what we think is going on right now. It's a bit of an interesting period. I mean, the market's always going through an interesting period, especially when it comes to short term. So Tim will touch on that, and we'll go through strategies that we like to use during the reporting season, really the whole point of the webcast tonight. Now, my name is Kara Connors. That's a goofy looking picture of me on the right. I still haven't changed the photo for those of you who attend my webcast regularly. I keep saying I'm going to change it. To be honest with you, I'm in desperate need of a haircut, and we go into lockdown so often here in Victoria. It's like trying to book my hairdresser has been tough, to say the least. So forgive me, but that's me. I started with the business about 8 years ago. In fact, I think Tim and I both started with the business about 8 or 9 years ago. I keep saying 8, it's probably 9 or 10 by now, my Lord. In fact, all of us here at Traders Circle have been here for quite some time. My journey started, I've worked in a lot of different places in the business, but I started out by learning, like a lot of people who work at Traders Circle do. Started out by learning about how to trade. I was very interested in the stock market from a very young age, and ultimately worked my way up to be the head trainer. Tim started as the head trainer, right? He used to help train people and educate them. And then when Carlo Castellano, who is the co-founder of Traders Circle, and I'll touch on Carlo a bit further on into the webcast, when he basically semi-retired, Tim took over to be the head of the trading desk. So I work on the trading desk as well. Part of my responsibilities is to help people with their positions, to give them trade ideas, to help them price up strategies, help them pick directions, etc. Tim does that in quite a great capacity as well, but Tim actually oversees the entire trading desks and a lot of other important aspects of the business as well. So between the two of us, I'd like to think that we have a good stretch of knowledge. Tim definitely the main workhorse when it comes to the fundamentals and the broader market, and myself a little bit more on the technical side of things as well. We like to run these webcasts because we like to express how we trade this market. We like to bring on the right type of people. We do run education courses. I'll touch on that a little bit further on, but we only take in small groups of people, and we just want to show you what we do, how we do it, and if you like it, then you can come on board. Now, before I get really stuck into the guts of it, I just want to express that tonight's advice is general advice only. So anything that we talk about is general advice. That means it's not tailored to your personal circumstances. It ultimately means that you need to decide for yourself as to whether this advice is appropriate to you. Okay, and that goes for basically everything that we do here at Trader Circle. We work under a general advice model only. Okay. Now, I'm going to get stuck into options, right? Options are the most flexible instrument that you can trade on the market. And I'm going to run through that in a moment. I'm going to explain what that means in a moment, right? And what I'm going to do during this webcast is actually try to explain to you what options are. Right? And what I mean by that is, if someone goes, what is an option? It's like saying, what is a share? Well, if someone asks you what is a share, you would go, oh, well, a share is part ownership in a company and entitles you to some of the profits of that company, et cetera, et cetera. I'm going to actually explain to you what an option is. Will that help you make money? No, not really. Knowing what an option is doesn't actually help you make money off options, funnily enough. Perhaps a controversial statement, but I would say it's true. But that being said, I still want to explain to you what an option is, so that you basically have an understanding, right? Just for your information. There's two types of options. There's a call option and there's a put option. Okay, nice and simple. I mean, I wish it was that simple. There's call options and put options. So all that wizardry, all that flexibility, everything that we talk about really just comes down to those two things, and buying and selling those two things. Okay. We trade options because, as I said earlier, they're the most flexible instrument that you could possibly trade through the Australian market, and perhaps any market. All right. Options provide flexibility in a sense that you can honestly trade any market condition. You can trade bullish markets, you can trade bearish markets, you can trade sideways markets. You can do strategies that are multi-directional, and I'm going to go through those tonight. Okay. You can profit off a position where if the stock goes sideways and up, you make money. You can profit off a position where the market goes down and sideways. You can even profit off a position where the stock goes up or down, right? So you take the guesswork out of it, and you make money if the stock goes up a lot or if it goes down a lot. Okay. The other great thing about options is they provide leverage. Now, if you don't know what leverage is, in a very, 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 very basic sense, it essentially means that you can just use less money to make more money, right? The flip side of that is that you can lose more money too. Now, anything that we teach here at Trader Circle, we always have a defined and capped risk. With options, you can actually do strategies that have unlimited risk, and of course, we don't recommend them to people, right? There will be other people out there, other institutions, other brokers, other educationers that perhaps teach strategies that have unlimited risk, but we don't recommend that anyone do them. Even advanced traders, we don't recommend that they do. Okay, and I would say it should be obvious as to why. So leverage is essentially an ability to use less capital to make more money. And if we're trading, then that's awesome, right? Because it ultimately means it's less capital intensive. I mean, it should be logical as to what the benefits of using less money is, right? You could perhaps do more trades. You could be more diversified, right? You could take profits quicker. And if you're trying to generate an income stream, the ability to do that plus the ability to make money in a bullish market as well as a bearish market as well as a sideways market is very, very beneficial, right? So we're going to go through a bunch of strategies tonight. I'm just going to show you, essentially, I'll tell you what, let's go through what an actual option is. And then what we're going to do is we're going to step into spreads. Okay, we're going to go through a bit of a crash course tonight. Not expecting you to walk away knowing everything, obviously, or even really remembering half this stuff. If there's anything that I want you to take away from tonight, it's just the possibilities and some of the concepts, okay? And if you've got any questions, feel free to ask them. I'll address them as I go, or well, actually, I'll probably more likely address them at the end. And if you want some clarification, you're welcome to give me a call, and I'm happy to spend some time with you. So a call option is the opposite to a put option. But both are contracts, right? So a call option is the opposite to a put option, but both of them are contracts. They're contracts between two parties or two people, let's say. Every contract has terms, right? Right? You do this and I'll give you this, etc. Right? And the terms of a call option are the right to purchase the underlying stock at a particular price in a defined period of time. So I'll say that again. A call option is the right, but not the obligation, to purchase the stock, the underlying stock, at a particular price, known as the strike price or exercise price, by a particular time, which is known as the expiry. So for example, a call option on CBA, let's say, is the right to purchase CBA stock at a particular price, in this sense, $76, between now and the 29th of December, the expiry. So this contract has a finite life. It doesn't go on forever. It will finish on the 29th of December. You can do option strategies where the expiry is in August, September, October, November, December. You can do expiries that are well into next year and the year after. You get to choose which expiry there is, right? Or how long the trade could potentially last. Now, that doesn't mean you have to be in the trade for that long, right? You're welcome to trade in and out of the position. You're welcome to sell and buy these options as you go, but the option will only last for its defined period or until its expiry. The strike price is what you trade the underlying stock for if it's exercised. Right? Now, again, you don't need to understand this stuff. This is genuinely not going to help you make money, really. Right? We're going to show you strategies and how to make money with options during this webcast, but I feel I have to explain what an option is in case you were interested. If you come along and do our courses, this is something that we're going to explain in much greater detail over a much longer period of time through various amounts of different resources where you don't need to try and learn it or remember this stuff in 30 minutes on a Tuesday night. Okay. Now, the buyer of the call option, that person's on one side of the transaction. When you buy something, you pay money, don't you? Right? That makes sense, doesn't it? When you buy something, you pay money. In this case, you're paying the value of the option, which is, let's say, $2. Now, you can buy as many options as you want, or that your capital will allow you to buy, right? Just like how a share, a CBA share might be $80, and you can buy one, or you could buy 1,000 of them, or you could buy 1,000,000 of them, right? Depending on how much money you had. So we're just talking about one option here. The buyer of the option agrees to pay the seller $2. That gives them the right to purchase the underlying stock at the strike price, right? Or in this sense, or in this context, I should say, that allows them to purchase CBA stock at $76 if they want to. It doesn't matter if CBA is trading at 77, 78, 80, 90, 100. It doesn't matter if CBA is trading at $60 or $50. It does not matter what the value of CBA is. It does not. The owner of this call option is allowed to purchase it at 76. Okay, and why do they get to do that? Well, they paid $2 for that right. And they have that right up until the 29th of December, right? Or options expiry. So think about what that means for them. What happens if CBA goes to $100? Well, they get to still buy it at 76. That's good, isn't it? Considering they only pay $2 for the option. But if CBA goes down to 50, are they going to buy it at 76? Probably not. Now, think about it from the other person's perspective, right? So it's two sides of the same coin here, right? We've got the buyer and we've got a seller. If you're buying something, well, you're buying it from someone, aren't you? So think about it from the seller's perspective. They're going to receive $2. And that makes sense, doesn't it? They're selling something. When you sell something, you receive money. In this case, they're receiving the $2. But why should they be given money? They just get $2 for free?
where they just, well, pocket it, thank you very much, I'll see you later? Oh, of course not, right? They get given $2, but they must take on an obligation to sell their CBA shares at $76 to the buyer of the call option. Does that make sense? So the seller is receiving $2, but at some point between now and the 29th of December, the buyer can figuratively come knocking on their door and say, hey, I want to buy your shares at $76. You have to deliver them to me right now. Right? And that obligation will last until expiry date. In this case, it's the 29th of December. Now, to take on that obligation, they're receiving money though, okay? Now you might say, okay, well, why 76? Why $2? These are numbers I made up, right? It could be $76, it could be 75, it could be 74, it could be 78, it could be 80, it could be 100. Right? There is a limit, but it's a very wide, you've got so much choice. Okay. Now I know, like, at the end of the day, we don't exercise options when we trade them. We just trade the value of them. So that $2, we're hoping goes up to $4 or $6, right? And I'm not going to sit here and get stuck into how options values is priced with intrinsic and time value and volatility and everything like that. It's just, it would be a lot of education to go through, right? We want to make this a little bit more of a practical webcast rather than a theoretical one, okay? But that's essentially what an option is, right? And instead of exercising, CBA, if CBA, let's go, trades at $80, instead of exercising at 76 and buying it at 76 and then selling it at the market price of 80 and making a $4 profit, we would just sell the option back, right? We'd just sell the option back to the market for $4 if it was expiry day or plus any time, etc. All right, but again, I'm not expecting you to understand this, right? I'm just trying to explain to you what an option is. Now, a put option is simply the right to sell CBA, right? So, the right to sell an underlying stock, and in this example, it's CBA, right? It could be BHP, it could be Woolworths, it could be Wesfarmers, it could be Rio Tinto, it could be Fortescue Metals, Newcrest Mining, QBE, it could be Ansell, it could be APT, right? Could be Brambles. There's a whole bunch of stock that you can trade options on. Right, I think there's roughly 80 in Australia. I mean, the list changes all the time, so forgive me if that's wrong. But essentially, a put option is the opposite to a call. Remember how I said that? So a call option is the right to purchase the underlying stock. Right? A put option is the right to sell the underlying stock. So you might have some CBA stock in your portfolio, or you may not. It doesn't really matter, right? The buyer of the put option agrees to pay a premium to the seller, right? In this case, let's say it's $1.50, and that makes sense, doesn't it? If you're buying something, you pay money. Well, you pay the option value, which in this case is $1.50 to the seller, but that now allows you to sell your stock, or in this case, your CBA stock, at $78. Now you have that right. No one can take that away from you. The market will uphold that right? Because if we didn't have that, everything would fall apart, right? The world would just, fall apart. So you now have that right. You've paid for that right. That $1.50 now entitles you to sell your CBA stock at $78 if you want to, right? It doesn't matter if CBA goes to $50. You still get to sell it at 78. It doesn't matter if CBA goes to $100. You still get to sell it at 78. Of course you wouldn't, but you could if you wanted to, right? It's your right. You don't have to, right? No one's got a gun to your head. You don't have to sell it at 78. But you can if you want to, right? It's your right, right? Pretend you're an American. Scream it from the rooftops if you want to, right? So you get to sell your stock at 78 despite what CBA trades at, right? And there's a huge advantage to that, because what happens if CBA does indeed go down to $60? What happens if it goes to $50? What happens if it goes to $40, right? You still get to sell it at 78. But your right does have a life, and in this case, it's until the 20th of June. Now, obviously, June's passed, right? But maybe it's next June. Maybe it's the June after that. Now, as you gain in time value, the more expensive your option would be. It would not be $1.50. It'd probably be closer to $10, right? Now, I made these slides obviously a few months ago where June was a lot closer, but my point is that in real life, this option would not cost $1.50. It would cost a lot more than that, especially on something like CBA. Okay. Right, because it does seem like a too good to be true kind of scenario, doesn't it? Now let's think it from the seller's perspective, because obviously when someone buys something, they have to be buying it from a seller. Now, you notice before I had the title, the writer, right? The writer is just another name for the seller, right? Writing is another word for selling to open, right? And if you don't know what that means, if that doesn't really make sense to you, don't worry about it, just move on. It's just another name for it, okay? The writer receives premium from the buyer, right? And that makes sense, doesn't it? When you sell something, you receive money, right? When you sell something, you receive money. But why should you just be given money? What, just because you're a good dude? Yeah, you visit your mum all the time, you call your gran? No, obviously not. You get given money so that you take on an obligation. And that obligation means you must purchase CBA stock at 78 if the buyer of the put option tells you to. So you get given the $1.50, but between now and June next year, the buyer of the option could come knocking on your door, figuratively speaking, and say, hey, I want to sell my CBA stock right now at $78. And you have no choice but to buy them. Okay. Now, practically speaking, we can buy and sell these options on a very regular basis. Exercise does not happen that often, right? In fact, they wouldn't happen as often as options are bought and sold, right? Because we just simply trade them for the value. Like, think about it like this, right? If you had a put option that allows you to sell your CBA stock at $78, what happens if CBA went down to 50? You still get to sell them for 78. You magically have a piece of paper that allows you to sell your stock at $78, even though it's worth 50. That piece of paper alone must be worth $28, mustn't it? That's a very good piece of paper to have. It's a very, very good piece of paper to have. It's $28 good. Yep. And so you could sell that option back to the market for at least $28, at least. So you bought it for $1.50, but now you're selling it back to the market for 28. Now, obviously, that's a huge, that's a blowout exaggeration. I mean, that's not, we're not looking for that kind of profit margin, et cetera, right? I mean, there's people who do, right? I mean, we have a client, who I can think of right now, and I know Tim knows who I'm talking about, who does that type of stuff, right? Where they do buy an option for a few dollars, and then they do wait for that massive crash, and then they do sell the option back for extraordinary profits. Okay, so that's essentially what a call and put option is. I really want to reassure you that that knowledge is not going to help you make money, right? And that makes sense, doesn't it? I mean, I know that sounds a bit weird, but if you really think about it, that's fairly standard, right? If you think about all the stuff how much of it actually makes you money, right? Probably a very small percentage. Yeah, I know that's the truth for my job as well. All right. What's interesting about options? Well, actually, one of the reasons why I love options, I mean, aside from the whole, money making mechanism, is that I find them very, very interesting, right? I mean, one thing that you could notice straight off the bat is that a call, when you buy it, is the right to purchase the stock, right? When you sell it, it's an obligation to sell the stock. And that makes sense, doesn't it, right? This person has the right to purchase it off this person, which means that person has an obligation to sell their stock to that person. When you buy a put option, you have the right to sell the stock. When you sell a put option, you have an obligation to purchase the stock. And isn't that interesting? So when you buy a call option, it's similar to selling a put option. And when you sell a call option, it's similar to buying a put option, but the difference being one is a right and one is an obligation. One you pay for and one you receive money on. Isn't that interesting? If you didn't make that connection, don't worry. I mean, it's not important. It's just kind of cool, right? So enough of that, right? With options, getting down to brass tacks, why we trade them is because ultimately we're allowed to trade different directions, right? It doesn't matter what's going on. You know, COVID could be rampaging through and the market could be crashing and they have to put the circuit breakers on, and you know, people are calling them Mars and making sure they're all right and everything like that. It doesn't matter. The world could be ending and we can still trade it, right? Or things can be really, really good and we can still trade that. Or, you know, not much can really be going on and we can still trade that as well. That's a beautiful thing about options, because ultimately, if we're traders and we're trying to generate an income stream and you want to be active in the market, you want to keep your mind active in retirement, right? You want to do these things on a fairly regular basis. Options is a fantastic tool in which to achieve that. In fact, it's probably the only tool that you could do it with, right? But unfortunately, with flexibility comes complexity. And again, that makes sense, right? You know, these things take time and effort in order to understand and to apply correctly. You can also trade volatility, and that kind of goes without saying. Now, with options, one particular strategy, and probably, you know, as we just kind of mentioned there with the call option, you can trade fairly directional. So, for example, if you bought a call option, let's say, you would profit if the stock went up. You would profit if you would lose if the stock went sideways, and you would lose if the stock went down. So it's a purely directional trade. I think the stock's going to go up, and so I'm going to buy a call option, and I only make money if the stock goes up. If it goes any other direction, I lose money. All right. So tonight I've chosen BHP as a bit of an example, and if you'll forgive me, what I'm going to do is I'm going to quickly jump across to my chart of BHP. Now, we run webcasts on technical analysis. Technical analysis is your best friend when it comes to shorter term styles of trading. Fundamental analysis is your best friend when it comes to longer term investing. Now, it's not necessarily about doing one or the other. And if you've come along and you've watched any of our webcasts, you've jumped onto our YouTube channel and you've watched any of the material that we've put out, you'll know that we like to do both, right? But we certainly favor technicals for shorter term and we favor fundamentals for longer term. Because I'm talking about BHP in from a shorter term perspective, really what I'm looking at it is from a technical perspective. I could talk about the fundamentals, right? It's reporting on the 17th. I guess it's a piece of fundamental data. Iron ore seems to hopefully have stalled around these levels, albeit has come off, and that's part of the reason why arguably BHP is stalled also around here. Same with copper and a few other baseline metals, right? I'll kind of let Tim talk about this type of stuff a bit further on, but I guess what I want to do tonight when I teach about these spreads is I want to give you a bunch of different strategies that you could do on this one stock, right? And you could see which one you'd like to do. So for me, BHP is trading in a very long uptrend, right? It doesn't take a genius to see that. It was down here in March, and now it's up here in August a year later, right? So obviously it's trading in an uptrend. It recently pulled back from its highs and it's stalled at a very, very key level of support. So roughly call it 51.50, somewhere around here, right? And you can't be too precise. There's a very, very, very key level of support, right? You've got the accelerated uptrend line that's also holding as well. Now, with BHP reporting on the 17th, right? Quite often what we see is a rally going into that report, okay? And again, Tim's going to run through some of the more dedicated reporting strategies in a moment. But let's say that you thought BHP was going to rally into its report. How would you trade that? Well, there's a few different ways. One, you could do a directional trade, which is what I just mentioned, right? So I'm going to bring that up now. Excuse me. Let me just go back to this. So a directional trade. All right. This is just simply buying a call option. Now, what are the benefits of a call option? And by the way, just in order to read this, let me explain it to you. This is BHP. This is the unique code of the option. Every option has a unique code, just like how every stock has a unique code, right? This is the strike, $49. This is the expiry, August the 26th. Now, for a call option, we would typically suggest doing a much later expiry, but I wanted to keep the expiries all the same, so you could kind of compare like for like. It's a call option in an American style. Don't worry about what that means. The value of the option is $3.19, okay? And I'm doing 12 of them. Now, with options, you don't buy one of them. You have to buy a minimum of 100. Okay, so think about it like bananas. You can't, I mean, you can, but you know, you go to the market, you don't buy one banana, you buy a bunch of bananas. Well, think about it like this, right? One bunch has 100 bananas in it. How many bunches are we going to buy? Well, in this case, we're buying 12, right? So 12 times 100 times $3.19 equals $3,828. Okay, so that's the maximum outlay of our position. And remember, I said to you earlier, anything that we teach has a capped risk. There are strategies that have unlimited risk. We do not ever recommend them to people to trade. I don't care how smart you are. So anything I run through tonight has a capped risk. Tonight, with this particular strategy, the risk is what you paid to enter, which is $3,828, because we did 12 contracts that have 100 options in them at $3.19 an option. Okay, I wouldn't worry about the maths too much, but I'd say it's fairly straightforward. We're not going to worry too much about the delta or the volatility or the net delta at the moment. Okay, we're not going to worry about that too much. If you're a seasoned options trader, you may think what I just said is blasphemy, and that's totally okay as well. But obviously, this is a beginner's webcast, so we're not going to stress too hard in those areas, all right? But what we've got here is the payoff matrix, and one of the cool things, and again, Tim's going to run through this at the moment. One of the cool things that we have as options traders is fantastic pieces of technology that allow us to see what the profit of our position is going to be at certain times at certain prices. So these are 1% price increments. Let's say right now BHP is trading at 51.72. That's 1% higher, 2% higher, 3% higher, 4% higher, 5% higher. And we also have 1% lower, 2% lower, 3% lower, 4% lower, and 5% lower. We have today's date, right? And then we have 2 days from now, 4 days from now, 6 days from now, 8 days from now, et cetera, et cetera, et cetera. Right? Now, I've just put those as the parameter of this matrix. You can change them with the calculator that we have. But ultimately, what we want to do is we want to see how much money we're going to make where and when. Now, for this call option, you can see in the early days, if you get a quick run up, you make some very good money, and that's profit, mind you. That's profit. So you're spending $3,828. If the share price was to rise to $54.30, you would make $2,652 in the next couple of days or thereabouts. So the total you would get back is $3,828 plus $2,652. You understand what I'm saying? That's purely profit, not what the position's worth, purely the profit. Okay, so with a call option, when you get a run up, you make good money. But you can see over time, you lose money, right? So let's say the share price does nothing. Let's say we don't get the run up until it's reporting, right? And again, remember, the reporting's on the 17th, so it's actually in between these 2 days here, right? So we would theoretically perhaps be looking to get out on this day here, on the 16th. Or you could play the report if you had a particularly bullish view of the report and you wanted to hold the call option. That's your prerogative. Tonight's webcast is not about picking direction. But yes, keep in mind that the report is between these 2 dates. So if you see the run up with BHP, you can see that you make the money. But what happens if it goes nowhere? Let's say it just goes completely sideways, right? You lose $90 in 2 days. You lose 170 in 4, and you lose 252 in 6. So if nothing happens to the share price and it goes sideways, you're already kind of behind the 8 ball, aren't you? Yeah, you're losing money as time goes on. That's what you call time decay. Okay. Equally, if the share price does go down, let's say you're wrong and BHP continues to fall. Let's say iron ore continues to fall. BHP is not happy about that. People keep selling down. You know, you can see that if it drops 5%, you also out $2,000. And that's the thing about options, right? You have to understand that, yes, it's fantastic that you can make money with such little capital, right? We're talking about a 5% rise and you're making $2,600 on an investment of $3,828, right? That's seriously good money. That's over 60%, right? My maths isn't too good there, but it's over 60%, isn't it? Right? You can check me on it, but it's good money. Yeah, if it falls 5%, you're also going to cop it. So we only recommend directional strategies when you're feeling quite sure. Or alternatively, don't risk $3,800. Maybe just put on $1,000. Maybe just put on 500, right? Only risk what you're willing to risk. But the beautiful thing is with the technology that we give our clients, you can actually check. Now, obviously this isn't gospel, but it's a pretty good indication, okay? I have to speed things along. I'm actually lagging behind a little bit. So we also have, remember how I said you could make money off multi-directional strategies, right? So with this one, you can profit if the stock goes up. You can profit if the stock goes sideways, but you lose if it goes down. Okay, so let's say you thought the stock was going to drift, right? It's like, ugh, it's crawling its way up. It's taking the stairs, right? It's got weights on its legs, all right. But I do think it's going to get back up to its highs, right? I do think BHP is going to crawl up slowly into its report, right? It's going to take its sweet time. It'll do 5%, but it'll do it over the next, X amount of time, right? You could employ this strategy. This strategy is called a bull call spread. Okay, and this is just the way that we teach it, right? Other places that you look at, they may teach it differently, and the payoff might be different. But this is just the way that we teach it. Okay. Now, again, options are very complicated. There's a lot to learn, so I'm not obviously going through everything at the moment. But right now, it's just about understanding concepts. Okay. What this involves is buying and selling a call option. Now you'll notice that the strike are at different levels, right? So you're writing a call options at $52 and you're buying a call option at $50.01, right? Now, if you sell something, you get given money, don't you? You get given $1.28.5. When you buy something, you pay something. In this circumstance, you're paying $2.49. If you buy something for $2.49 and you sell something else for $1.28.5, then the shake up is that you end up paying $1.20.5. So that's the value of this position. If you don't understand what I just said, it doesn't matter. $1.20.5 times 100 times 40 contracts equals $4,820. So that's the maximum risk of this position. You'll just have to take my word for it. Okay. All right. So now looking at the payoff matrix, you go, okay, well, that's all well and good. So why would you do the directional strategy? Why would you do the directional strategy, the call option, when you could also make money off sideways movement? Well, obviously for every advantage you gain, you also take on a drawback, right? There's no free lunches in this market. Risk is a function of return. It always has been and it always will be, right? We live in a very sophisticated world. There's people who've thought of this who are much smarter than anyone online, I would be happy to say. And that's no insult to anyone. That's just the reality that these markets are very, very, very smart. So if you're able to profit off bullish movement and sideways movement, you have to give something up. You have to. And in this case, what you're doing is you're capping your profit. You're capping your profit and you're making less with the same movement. So in the previous example, we were making like 2,600 with a 5% rise. Yeah, 2,600 in a 5% rise. Now, on a bigger investment, we're actually only making a couple of grand, right? So we're making what 60%, I said earlier, or something like that with terrible maths. In this circumstance, we're making under 50%, let's call it 40, right? Again, terrible maths, but just trying to highlight the disparity, okay? So in this circumstance, you're only pulling in a couple of grand off a 4,800 risk. All right. I mean, it's still good numbers. Don't get me wrong. It's still great, but not as much as doing the directional strategy. You're also capping your profit with this strategy as well. There's only so much you could make. It doesn't matter if you get a 50% rise. You're probably, you still only make as much as if the stock rose about, let's say 7, 8, 9, 10% or something like that. Okay. Yeah, but you do profit as it goes sideways. So you might say, look, I think the BHP is going to run into its report, right? I do. I think it's going to run into its report, but I'm a little bit worried that I could be wrong. One, I could be wrong, right? Two, I think iron ore might, not exactly rise from here. It might actually continue to fall. That might dampen the share price. Might just end up going sideways. Well, in this circumstance, at least you'd be able to cover some of your costs on the way out, right? Remember, here's the report on the 17th between these two numbers. At least I'd be able to cover some of my costs. Isn't that good? Right? If there wasn't a report on the 17th and 18th, and you held it roughly close to expiry day, which again is the 26th of August, you'd actually be able to make money from it going sideways. You make $860 on by the 24th, which is pretty cool. Now, again, you might not do 26th of August expiry. You might push it out to September. Which expiries we choose, what strikes we choose, how many we sell, all that type of stuff is stuff that we teach to our clients during our education courses. It's just way too much to teach in one night, okay? I think you'll forgive me for that. Now, another type of strategy, this is the second last one, all right, so we're halfway there, is a more sideways oriented strategy. So it's, you still make money on the rise, right? You still make money if the share price goes up, but you're not going to make as much. You make money if the stock goes sideways, but you also make money even if the stock falls a little bit come expiry day, right? You only actually really ever lose if the share price falls a lot. So for this trade, it's like, you know, the share price can go up, the share price can go sideways, but it can even fall a little bit and you still profit. Okay. And we essentially, in order to achieve this, we essentially utilize something called a bull put spread. So again, it's another bullish strategy. In this time we're using puts. You can use calls. I don't really want to get stuck into that right now, but you can use calls if you want to. But the beautiful thing about this strategy is that if the share price remains above a particular price point, in this case, the sold leg, so $50, if the share price remains above $50 by the 26th of August, you make your maximum profit. And with this strategy, you're receiving money up front. Now, I don't really like running through this strategy when I don't have a lot of time, and I don't have a lot of time right now, because you're actually going to receive money when you enter the trade. The risk of this trade is roughly $5,000 or something like that. Okay, you're receiving money, but you know, obviously, like I said, there's no free lunches in the market. You can't just be given money. That'd be awesome, but no, obviously, it doesn't work like that. You do have a risk on this trade. It's essentially the difference between the strikes minus the credit that you receive. But yeah, I don't really want to get stuck into it too much. Looking at the payoff matrix, though, I guess the more important aspect of the trade, you can see that again with even with like a $5,000 risk, you're not making a lot with a short-term rally, are you? Right. So over the next couple of days, if you do see that 5% rally, you're just not going to make a lot of money. You know what I mean? But if it goes sideways, you know, you're doing much better, right? Before you're making about 800, with this you're making about 1,200. That doesn't seem like a big jump up, but that's an extra 50%, roughly 40%, roughly, right? So you can see it's a much more sideways movement. But even if it goes down, right? I mean, even if the share price falls, falls 1%. By expiry day, you make 998, right? Or close to expiry day. If it drops 2%, you make 578. And if it drops 3%, you break even roughly. Okay, as long as the share price remains above $50, you make your maximum profit. Okay. So we've gone, you know, it's like licorice, all sorts, right? We've got strategies for everyone, right? We've got all sorts, right? It doesn't matter, you know, what your view is. We can help you trade it. I mean, I just showed you 3 bullish strategies. And we got more, by the way. It's just there's only so much we can fit in to one webcast. Now, we do have one more strategy, which is the multi-directional strategy. You know, essentially what happens is you profit with a rise or a fall. And this is the type of strategy we like to do during reporting season, because we honestly don't know which way a stock's going to go, right? I mean, you could have a really good report and the stock falls, and we've seen that plenty of times, right? And you can have a bad report and the stock will rise, right? And there might not, you might be able to sit here and argue as to me why that is. Fact is, I just don't care, right? With this strategy, I make money if it goes up or down, but it has to move a decent amount. It can't, you know, it can't go up a little bit, right? We need to see some mustard on the trade. We need to see some proper commitment from the share price. It needs to tank or it needs to rise. And you go, by how much? Well, that'll come down to the payoff matrix. So here's an example on BHP. If it goes up a lot, you make about 4 grand. If it goes down a lot, you make about 5 grand. If it goes sideways, you cop it. This is not the reality of the trade because volatility comes into it, but that's what I'm going to bring Tim on. So after Tim comes on, I want to talk a little bit about our services. So please stay on. I'm going to talk about our options course as well. Just full disclosure there. And if you've got any questions for me, please type them in and I'll address them at the end. But for now, what I'll do is I'll try to just bring on Tim.
Thank you very much for that, Caro. Just give me one moment and I will share my screen. Okay, so that was a great explanation of options there. And what you'll find is there is just like if you can buy books on these strategies, right? And these books are usually based around the US markets, and there is hundreds of strategies out there you can do with options. But what we do, and what Cara's just given you a taste of, is we break the strategies down. One, we only teach what works on the Australian market. And two, we break the different strategies down into categories, right? So directional to sideways, purely sideways, and then multi-directional. And that way we can get an idea of what we want from the market to profit from that type of strategy. So we break, if we break it down into those 4 categories, it's a much easier way of learning those types of strategies and what's available inside those categories. Okay. So what I'm going to do now is give you a taste of some strategies that I'm looking at and actively talking to clients on. One strategy a couple of my clients have actually done on the reporting season. Then I'm going to show you a sideways strategy as well to just finish things off. And the reason why I'm doing that is purely because that's what I see worth trading right now. So what I'll just start real quickly is just give you a view of where I'm at with this market in the short term. So this is the XJO top 200 stocks of our market. I use this index over the All Ords purely because I can trade options on it. Okay, so if I do have a view here, I can trade that view, right, which is really, really important. Okay, so at the moment, since we came out of the COVID pullback last year, we've been on a nice, steady and strong uptrend. Through that long-term uptrend, we have accelerations off that trend line. We pull back to the trend line or go sideways into the trend line. You can see the behavior of this trend, guys. Okay, you can see it on the charts, clear as day, right? Uptrend movement, so big acceleration off the trend, sideways back into the long-term trend line. Push up, sideways, push up, sideways. Guess what's going to come next? Push up, probably sideways, right? So look, in the short term, we're on an uptrend movement. So technically, we're never trying to exactly predict what's happening next, guys. What we do as traders, we look for technical signals of what's likely to happen next. So right now, the trend is up in the short term, okay? Sorry about that. So the trend is up in the very, very short term there, okay? What we'll be looking for now is where this stops. Okay, where is it going to stop and start doing this sort of sideways period or maybe a small pullback towards trend? Okay, that's what we're looking for signals of. Okay, so seasonally, okay, so what tends to happen is the market runs into reporting seasons. Okay, so you get a lull over May. Okay, so May is a bit of a sideways bearish period, and then you get a bit of a run into reporting through June, July, August. Okay, so here we've seen through that into that June period, sideways into that August period. So usually you get a bit of a bullish move. What that bullish move looks like every year is different, but you tend to get a bullish move. We're right on the edge of the reporting season. We've seen a couple of stocks, big stocks report this week already. Suncorp, Challenger today, James Hardie, just to name a few. But the big one is CBA tomorrow because that's going to lead the banks. Okay. So what I feel for the market at the moment is there's the likelihood of some further upward movement through the reporting season, because what we've seen out of the reporting season so far has been very, very strong. The US reporting season was very, very strong. So we feel that we're going to see a little push, a continued push up through this reporting. Then as we go into that September period, we'll probably pull back or go sideways. And that's why I want to show you that sideways strategy as well. All right, so let's just start off with showing a strangle trade. So a strangle is a multi-directional strategy. Okay, I will start by showing you one on QBE. So what we're doing here effectively is we're buying a call option and we're buying a put option at the same time, same quantity, same expiry. Okay, we go either side of the share price. And for you guys that are a little bit more experienced that know what delta is, we want a delta that's fairly similar. Okay, so what the idea is, guys, here, what we're trading is what we call volatility. The idea is that we want to pick stocks that we believe are going to be volatile on their report. There are certain stocks that more times than not will move large on their report. We don't know which way. We don't want to pick the direction. What we want to do is jump on and get a large movement. And that's what I mean about trading volatility. Okay, we have a belief that this stock's going to be really volatile and it's going to be volatile soon. Now, the payoff matrix tells us everything. You don't need to know this side of it if you're going to enter in a trade. This is the most important bit down here. Okay, so what this matrix shows you, got share price movement on the left-hand side. I've got that set at 2% increments. So every one of these is a 2% movement in share price. Okay, then I've got day increments set on 1. All right, so what's the nature of this strategy? We're risking $5,000, okay, on the trade overall. That's what we're paying to get in. That's the maximum we can lose, and this is how much we will actually make. This is profit, okay. So that's a 2, 4, 6% movement up day 1, which is not the case. This reports on the 12th, okay. So this would be 2 days from now. Okay, on the Thursday, you're going to make $1,900 if also there's the other part of it, volatility doesn't change. All right, volatility will probably come off a little bit, so it'll be a little bit less than that, maybe $1,500. Okay, so we're looking for at least a 6% movement up, or a 2, 4, 6% movement down, which would give you around 2,600, maybe $2,000 once you get a change of volatility. Okay. So how I trade these guys personally is I will allow 1 day after the report. Win, lose, or draw, I have to be out on Friday, okay? If I'm going to trade a short-term expiry, there's ways of trading it for a longer period of time, and I'm not going through that tonight. But basically, if I haven't had my 6% movement up or down by Friday, win, lose, or draw, I'm out of there, guys, because if the share price doesn't move, I can lose 900 to even potentially 1,500. If volatility is really rough, 1,800. So look, it depends on volatility. There's a bit more analysis I do around volatility, but at this point of time, I don't want to blow your brains. It's already 8 o'clock at night, and there's going to be way too much information for a 1-hour webcast. So basically, guys, look, what I want to do is just show you the concept of what can happen, right? So this is a trade for Thursday, okay? Write this down if you want. Take a quick screenshot right now. If you're into options and you know how to price options up, or if you're curious, just email me and I'll tell you how this went. You can come in and have a look. The trade's worth 49. We're buying an 11.75 August. Call option, we're buying an 11.50 August put option, okay? 49 cents is the value. See what comes Thursday, right? QBE is one of my favorites for the reporting seasons, by the way. It more times than not can move 8 to 10% on the back of the report. But sometimes, like I said, you got to give it that one extra day sometimes, okay? Other things, I'm not saying trade this tomorrow, guys, please don't jump into any options trade on the back of a 1-hour webcast if you don't know what you're doing, because management is everything, right? I might close one side of this trade out and keep the other side on Thursday, right? I might do all sorts of things to this trade. I might add sold legs. There's all sorts of things that I can do as an experienced trader. Don't just go jump in on this, okay? We're just showing you what can be done at this point of time, because you can't teach everything in a 1-hour webcast, right? It's just options is a big subject. We're very good at educating options. We've been doing this for a very, very long time. If you want to learn options, you need to carve out 3 months of study solidly to understand this and how to manage this properly. Okay, these are derivatives, they are leveraged products, and they deserve a lot of respect and a bit of time in education. Okay, now I want to quickly show you one more because I'm just being wary of time. Suncorp, okay, this is already reported, right? This is a trade that we were looking at last week. So the 5th of August, and I'll show you on the chart real quickly for Suncorp, the 5th of August. Okay, so let's go back in time. All right, so 5th of August is here, right? I tend to get into these trades 2 to 3 days, trading days before the report. If you get in the day before, okay, the volatility is going to hit you hard. So there's a fine balance, and there's a bit of analysis that we do to say, all right, well, it's too volatile, we're not getting in, right? There's too much volatility in the options, we're not getting in. There's a few things I'm not showing you here in the way of analysis in getting into these trades, right? But essentially, look, this was the day we're looking to get in, okay, the 5th, purely because it was quite, two trading days before the report. The Friday was another sort of sideways day. Okay, and then come Monday, this is what's happened. Come today, it's pretty much closed where it closed yesterday. Now, when we were pricing the trade up on the 5th, it was pricing up at a 62 debit. Okay, so 62 debit. Just get my calculator out here. We did 70 contracts, so 70 times 0.62 times 100 contracts, 100 shares per contract. Our risk, our original outlay for the trade was 4,340. Okay, and we're closing out today for roughly 7,400. Right, so that's a $3,000 profit, guys, because we would have received today 7,400 for the trade. All right. Obviously, we're going to take some costs out, but that's on the back of a rather large movement, okay? This doesn't always happen. That was a very good result, okay? But these are the ones that this is what you're looking for, right? These are the types of moves we're trying to predict, okay? So that was an 8% movement, okay, to where we were able to close out. At best, if you actually closed out all the way up here, you would have made a hell of a lot more. That was a whopping 12% movement to the highs. You're never going to predict that perfectly, guys, okay? I'm a realist here, all right? 8% is probably the best you would have predicted it to, and that's where I'm happy to sort of say $3,000 profit, right? So look, that's a real example, guys, of a trade, okay? That was priced up on Thursday. You've seen the movement. You can see what can happen. All right. So what I'll show you is maybe one more strangle. Okay. I won't show you CBA. So I'm not a big fan of CBA on the reporting, to be honest. Okay. I don't really trade the banks too much. They don't move enough, right? Quick enough. Right. Goodman Group. Okay. Goodman Group, I've had a good look at. You can get enough movement out of a trade like this. It is a strong moving stock at the best of times anyway. So if we get lucky, we can get a nice big move up or down on this. So you are looking at stocks that can move large, right? If you have a look at where it's moved over the last few days, it's already 6% in 3 days. Right, this doesn't hang sideways for long, this stock. It tends to move, and that's what we want. We want large movement in one direction or the other. So Goodman, okay, once again, the way we set it up is we're buying a call and we're buying a put across the money. So 23.75 is the share price. You can see I've got a 24 call option and a 23.50 put option. So across either side, delta's at a similar level. Right. Once again, around a $4,000 risk. Now let's have a look at the analysis. I want that on a 1-day increment. What I like about this, guys, this time I have this set on a 1% movement, right? 1%. So come reports Thursday, and the reason why I'm looking at a lot of Thursdays ones is because today was the day to get into the Thursday trades, right? Okay, so 4% movement up or 4% movement down, right? So 4 to 5%. If I can get 4 to 5% by Friday, I'm making some good money, right? That's not bad. That's not bad at all, right? Off a $4,000 risk. Now, I've got people that do $10,000, $15,000 risk on these trades, right? I've tamed it down a bit for the webcast, but we've got guys that do big risk on these trades. Okay, they're very particular about the ones they get in on. They've done their research to see which ones tend to move a lot, and we do look at volatility before we get in as well. So there's a few steps to getting in, and I'm not showing you tonight. Okay, I can't stress that enough. But this is another one we're interested in. Okay, Goodman Group, it reports on Thursday. Once again, take your screenshot. follow it through, check out what it does. Okay, it's worth 60 cents now. See what it's worth on Thursday and Friday, and you'll get a bit of a taste on how we went. Right. Okay, so they're just some examples of reporting strategies. The two strategies you want to look at are called Strangles, and these what I've shown you tonight is Strangles. The other one's called a straddle, which is very much a similar strategy to this, but instead of having different strikes, with the straddle, you use the exactly same strikes, and that's really the only difference there. Okay, for me, it's not a preference thing. For me, I use straddles when there's a use for the straddle over the strangle. That's too much to explain tonight. But they're the two strategies that I'm showing you here for reporting seasons. They're what they call a long volatility trade, which means we're predicting there's going to be a strong volatile movement in the stock in the short term. Okay, and the best time to get that type of movement is around reporting seasons. Okay. That's the best time. All right, so I'll show you one more strategy and I'll hand you back across to Caro. All right, so the next strategy I'm going to show you is, and the reason why I've got this already in my matrix too, and I'll be keeping this in here for the next few weeks, is this will be my September strategy, right, at some point. And I'll move my strikes around at some point, depending on how things land over the next few weeks. If the market keeps running up, I'll move my strikes a bit higher. If the market pulls back, I may even move my strikes lower a bit, depending on what's going on. I wanted to show you what a short iron condor is. And listen to the name, right? It's a short iron condor. So the strangle was a long volatility trade. This is a short volatility trade. It's the opposite, right? So we don't want movement. We want to predict that the market's going to go sideways in a range for a period of time. Okay, so I'll show you the payoff. Look, there's 4 different options that we're playing with to create this strategy, right? So I'm not going to go through all that. Okay, what I'm going to show you is the payoff matrix, because that's what really tells the story here. All right, so have a look. Big movement up or big movement down, I lose. Okay, sideways movement, I gain. Right, so if it goes all the way through to expiry in September, I'm going to make up to $1,900. Okay, off this trade. The maximum risk on this trade, okay, if I can, I'll throw that out to a 4% movement. Okay, so it doesn't matter how much it goes up or down. There's a capped risk, and that capped risk is 3,000. Okay, so for 3,000 risk, I have a potential profit of 1,900. That's not bad, guys. That's not bad for the style of strategy this is. I don't have to pick direction. Okay, now this is a September trade, so I'm stuck in there until at least the 16th of September. Right, but the probability of picking the direction correctly here is, for me, very, very high compared to trying to pick the short-term fluctuations right now. Okay, especially once the reporting season finishes, and I'm not going to touch this until maybe another week or so. Right, I want to get on the other side of the reporting, see how the reporting goes, and I'm also looking for this trend to end. Once this trend ends, okay, we start going a bit more sideways, and we break this trend line again. Okay, the short-term one. Oops, sorry, I'm in the wrong chart. I've got to get across to XJO. Once this little uptrend line here breaks, and we start seeing a bit more sideways, so we start seeing this type of action down here. All right, even just a few days of it, and we clip through that trend line. So a perfect example of what I'm looking for is what happened back here. Okay, so you had that short-term uptrend, and you can see at one point or another that uptrend broke. Okay, that's what I'm looking for a bit of an entry for this particular trade. Now let's have a look at the levels. Right, where do I have to keep it between? I need to keep it between 77 or 73. Okay, so 77, guys. It's not even on my chart. I'd have to keep it below 77. What's the chances of going above 77, right? Look, if you have a look at the general movements on our market, I'd say pretty slim, right? Why would I say that? Because if you have a look at the last movement through here, guys, okay, that was a 7% movement, okay? That was a 7% movement from trend before the market stalled out. Okay, if I do the same thing again, well, hey, guess what? The magic number is 7%, isn't it? Okay, so this is where I think 77, I think we'll probably find resistance. Okay, that's why I'm feeling pretty confident. Have a look at this trend, guys. It doesn't move other than this big one down here, right? Which was early on in the trend. Other than this one down here, which was November, December last year around the US elections. US elections was a unique situation, right? We're not going to see a US election anytime soon. 7%'s been the most movement you've seen off trend. And that's how I've picked my resistance. Now, how have I picked my support? Well, it's below the overall long-term uptrend line. So I'd have to make the statement here that I don't think the uptrend, long-term uptrend is going to break. So 73 and 77 are pretty solid levels. And that's how I've picked those levels. So there's some technique behind how you set these strategies up and what levels you pick. And we teach all that in our courses. Okay. And I'm giving you a snippet of this now, but I'm not showing you everything. Okay. So have a think about this for a second, right? Just think about this simple concept, and I'll just draw this quickly on the chart. The reds are where I'll need to keep it between. Okay, so if you have a look at this chart overall, okay, just make this that little bit thicker, and I'll just get rid of some of this noise because there's just a lot of noise on this chart, isn't there? Okay, so if you have a look at the behaviors of our market over this sort of period of time, would you agree that there's a high probability of the XJ staying between these two levels coming into September, given how much it's already run up? Okay, we got dividends, which will pull the market down in September, right? So there's at least 100 points of dividends there coming up, right, which will lag the market. What do you think is, I think there's a fair probability of success in that trade, right? Now, I hasn't met all my requirements to get in yet because we're still on an uptrend. But when this uptrend tops out and we start going into that sideways phase, like one of these, that's your time. That's your timing. Because in those sideways whippy markets, in this period of time, it's very difficult to pick direction. So you want to be on some of these strategies. So as the market's going through its phases, and this is why we learn more than one strategy, guys. This is why we don't want to just trade in one direction. Okay, we're short-term traders. We want to be in and out of trades. All right, we want to have the ability to make money every month. Okay, so have a look at how long these sideways movements can last sometimes. Okay, this particular one here, that was 89 trading days. 89 trading days, guys. We're not come off a massive movement and we went sideways for 80 trading days. All right, that's a long time for the market to be whipping around. This little one here, okay, it doesn't look like much, but that was 51 days or 30 trading days. That's almost 2 months, guys. Okay, almost 2 months. The most recent one through here, okay, 55 days. 50 days, sorry, 34 trading days. That's a long time to be having a hard time picking direction. That's where these sideways strategies are so important. So if you learn options, you're always going to find a trade. Okay, it's very rare that I'm personally not in a trade these days. Okay, after the years of experience that I've got, because there's always a strategy that I could apply to a stock as long as I have a view. Right, the view can be up, the view can be down, the view could be sideways, and the view could be either direction but volatile. Right, they're the main groups. Okay, there might be a few strategies that live outside of that, like covered calls and things that we're not talking about tonight. They're more of an investment style. There's so much you can do with options, guys. But from a trading perspective, we've given them groups, okay? Directional, okay? So it's more leveraged. You're going to get more bang for your buck out of your movement, but you have to get that direction right. Directional to sideways, where we're putting a cap on the profit a little bit, but now we can also make money out of the sideways movement, but still get very good money out of an upward movement. Sideways, where the market's just whipping around and doing nothing, okay, and we can still make money out of sideways, or our reporting season strategies, the Strangles, okay, multi-directional trades, all right. All right, so I'm going to leave it there and hand back to Caro. I hope that gives you a really good picture into what you can do with options, guys. Okay, there's so much you can do. There's so much in the books. Don't bother about the books, though, guys. There's too many strategies in there that don't work on the Australian market. Okay, we've given you a little bit of a sneak peek of what we teach. Okay, and what we do teach in Trader Circle is how to trade options on the Australian market, not the US market, which can be very, very different. Okay, very different. All right, I'm going to hand you back across to Caro. Thanks for listening in, and happy to take some questions at the end of the end of the webcast. So yeah, start thinking about any questions you've got, put it into the Q&A box, and happy to answer those questions, guys.
All right, I'm just going to try and share my screen again. Tim you'll have to stop sharing yours so I can share mine, if you could, please.
Has that not stopped? You should be able to share yours now. Is that working?
No.
Yes, second.
Give me one moment.
Okay, try
Okay.
now.
Yep. All right, sorry, it was just a bit slow, that's all. All righty then. So I just want to talk about some of the services we provide. Hopefully you've enjoyed tonight. If you are a client of Trader Circle, then you kind of know the type of support that we provide, the high level of service that we provide. But if you haven't signed up with us yet in any capacity, what we essentially provide to our clients is a range of professional services around trading. So, for example, we provide expert trade execution. With options, it's not as simple as hitting the bid or the ask as you would with shares. You actually get filled in the middle of the bid and ask. Or, well, I mean, if you're an advisor worth your salt, you do, certainly, right? And, quite often I'm able to get better prices for my clients or for the people who want me to execute their orders and options. I can even call up market makers to help get you better fills. Right, and if you don't know what that means, I can tell you right now, there is a serious amount of value in that. I have to take my word for it at the moment. We also provide trade recommendations to our clients, right? We also provide trade ideas. Now, there's a difference, right? Recommendation, if we see a trade that we like, right, that fits the rules that we teach you, then we'll send them out to you, right, as members, right? We'll send you the trade idea. We sent out a call option on BSL today. Right, so anyone who had a trading with account that is paying for membership received a text message that said, essentially it said, hey, we're suggesting a call option on BSL, go check it out. Right, this is the contracts that we suggest as a minimum. This is the price that we suggest. Right, these are the reasons why that we're suggesting this trade. But if you have a good relationship with your advisor, and it's worth saying that Trader Circle is a small business, right? We're local, we're here in Melbourne. We're located just off Little Flinders Lane, right, in the city of Melbourne. Well, I mean, when we're not in lockdown, and we've all been here for a really long time. And the real success of our business, the reason why we're able to compete with those major companies out there is because we'd like to develop long-term relationships with our clients. We're focused on retention, right? So if you develop a relationship with an advisor, it might be myself, it might be Tim, might be someone else in our organization. We're very happy to give you our own trade ideas as well. Basically, we'll help you price up strategy, we'll help you manage your risk, we'll help you choose the appropriate strategy. So you could call me up, right? You could call myself up, you could call Tim up, and you could be like, look, I'm still learning options, or I don't really know much, but I am really good at picking direction. That's my strong suit. And I think that this particular stock is going to do this over a period of time. How can I make money from that view? Right? And we'll help you price it up. We'll go, okay, well, this is a pretty good strategy. Here's the payoff matrix. If it goes up to this particular point, you'll make money, or if it goes down here, you'll lose money, or something like that anyway. And you'll go, yep, that sounds good, or you'll go, no, that doesn't really fit my view, etc. Right? We're happy to work with you one-on-one with your trading, essentially. It's a very long-winded way of saying that. What really separates us from other people is, as I said earlier, we're a small business. I think that makes a huge difference, right? We want to focus on you as an individual as much as possible. If there's any Trader Circle clients on right now, I think that's a very reasonable claim that we certainly fulfill beyond expectations. Right? We support you as much as you need. The only help that you don't get is the help that you don't ask for, and that's genuinely true. And we don't earn individual broker commission. So if I do more trades than Tim, I don't earn more money than Tim, or vice versa. So there's no incentive for me to try and push you into that trade. If you call me up and say, hey, I'm thinking about doing this trade on BHP, what do you think? I'm going to give you my God's honest opinion. In fact, sometimes I'm a little bit too opinionated, right? Sometimes I can maybe come across as a little bit too opinionated because I'm always very honest with my clients, but I think that's what most people are looking for anyway. Now, if you don't know how to trade options, we do suggest you learn how to do so before trading them, right? You know, cars allow you to get to where you want to be a lot faster than walking, but driving a car is a lot more complicated. And so, you know, you need a license, right? You need to go and practice. You need to learn and pass a written exam. Then you need to have someone who sits next to you. Maybe it's your old man and he holds your hand, figuratively speaking, as you learn in a parking lot how to drive before stepping onto the road. And options is no different, right? We're talking about a leveraged product where you can make a lot more money with a lot less money compared to shares. And so that level of sophistication requires a proper education, right? If you step into a car without having that proper education, then yes, there is a good chance that you crash, figuratively speaking, or in this case, lose a lot of money. Okay, so we do run a course, and the reason we run the course is not because we actually make money from it. It's actually not a profit center for us, right? When we run our education, when we do our courses, we actually kind of break even on them, right? We run them as a stepping stone to working with you as an individual for a long period of time. We want to teach you and equip you with the skills so that you can actually do this for yourself, because the best trader for you is you. It's actually not me, because I don't know what your risk tolerance is, and I couldn't take it into account anyway because we only provide general advice. Does that make sense? Now, with our options education, we actually run a 2-day course, and that course is run by Carlo Castellano, and I mentioned him at the start of the webcast. He's the co-founder of Trader Circle, and he's been teaching and trading options for like over 25 years or something ridiculous like that, right? He's taught locally. He's actually been asked to teach overseas as well. You know, the guy is an expert trader, but he's also an expert educator, and that makes a huge difference when learning something complicated like options. Okay, so you're going to learn directly from him exactly how to trade options in a small group, right? We only take in like 10 people. We used to take in like 70, but we don't want you to get lost in the crowd. All right, we don't want you to be able to fall asleep at the end, in the classroom. We want you to basically be able to ask all your questions and get that individual focus that I mentioned earlier. The first day, we're going to talk about options basics, right? So you're going to understand how they work and why they work, how to pick the right option. You've got the different strikes, you've got the different expiries. All right, we're going to teach you how to use the calculators. We're going to go through covered calls kind of briefly. Okay. The second day, it gets a little bit more, second day gets a little bit more hectic. We actually start getting into advanced options. Those are the spreads that we just ran through. So the straddle and the strangle, the bull call, the bull put, the iron condor, right? We're going to go through all those advanced strategies, but more importantly, we're actually going to show you when to use them, not just how to use them. Right, so that BHP trade is a good example. I gave you 4 different ways to trade that BHP trade. So which one should you choose and how do you set it up? And that's what we're going to teach you. We're going to show you a practical way of actually how to do it. Right, it's not going to be theoretical. I'm not going to sit here, talking for hours on, how options work and delta and all that type of stuff, because that's not going to help you make money. Remember what I said to you earlier, just because you know a lot of stuff, that stuff doesn't actually help you make money. Right, we're going to teach you the things that we think are actually going to help you make money. All right. Following the 2-day webcast, it's a webcast if you're in a lockdown. That's one thing I should mention. It's a 2-day webcast if you're from interstate at the moment. All right, so it is what it is, right? We do prefer face-to-face because there's just a, you know, je ne sais pas, I don't know how to say it, right? There's this kind of thing, right? Learning face-to-face is better. I'm sure a lot of you agree. But the reality is that with COVID going on and we coming in and out of lockdown all the time, there is a good chance that you actually have to do it face-to-face if you want to do our, through webcast if you want to do our education. All right, that even goes for people who are local. We used to have people flying like international to come do these courses, right? But that's obviously not a reality right now. But following that 2-day session, I should say, we do have an extended learning, right? Because, you know, obviously, as I said to you earlier, one of the things that we pride ourselves on is support. And obviously, you're not going to learn how to be a successful trader in 2 days, right? So we give you access to our online portal. It's called our members area, right? So you get 2 months access to that. And during that period, you'll have a whole bunch of training videos that you can watch in order to practice and learn all the core concepts or revise all the core concepts you learned during the 2-day session, right? You'll have access to trade suggestions, daily market updates. You'll also get access to daily webcasts. Now, these webcasts are fantastic. They go for an hour. They go from 12 to 1 every day. And they're an advisor going through the market and looking for trades, right? I run one on Wednesday, right? So it's my Wednesday webcast, right? All old clients, new clients jump on. It's mainly new clients. And what I do is I spend half an hour going through the market, talking about the market, and then I spend half an hour to 40 minutes going through options education. Tim runs his webcast on a Tuesday from 12 to 1. Right? Clients jump on. Tim doesn't go through education though. He's the head of the trading desk. You know what he does? He goes through the market and he looks for trades, right? So you get to sit there and participate if you want to. I mean, you can just sit there and listen, right? In a live webcast where you've got the head of a trading desk with years and years of experience going through the market, looking for trades, applying these strategies live in front of you, right? So you might be like really busy, right? Like let's say, you're like most of our clients, you're a small business owner, you're a full-time professional, right? You just got a lot of stuff going on in your life. You can find half an hour to an hour during your lunch break. You jump on for Tim's webcast, or you jump on for my colleague Sam or Jimmy's webcast, my webcast. You know what? You got half an hour and an hour, and you can go through the market. You can look for trades. You can keep up to date, right? You call us at 3 o'clock in the afternoon. Hey, Tim ran through a trade earlier. It was BHP. He suggested this strategy. Do you mind if I have a quick chat with him so I can put it on? Right? How awesome is that? If you can't attend the daily webcast from 12 to 1, it is recorded. Okay, so you can watch it that night. That's really good for my webcast because I run through a lot of education. During that 8-week period, we run through a paper trading competition. Okay, basically it's like a demo account. You know, we want you to practice this stuff before you trade it live, and well, it's a competition, so the winner gets a prize. But really the idea is to try and simulate real trading. So we do that for an 8-week period. We expect you to participate. We expect you to try and make money, obviously, and we want you to develop good habits. Finally, you get your own personal trainer. So really, this is where we shine. This is what separates us from most other organizations that I've ever heard of. You get your own personal trainer. I'm the head trainer, right? So really what your trainer's job is to facilitate your learning. Okay, they're really there to run point, right? Make sure that you're not making any silly mistakes. You can call them anytime. You can email them anytime. Yeah, really there to hold your hand as you learn and as you practice trading, right? You could call up your trainer and be like, hey, I'm in this paper trading competition. I haven't seen any trades today. What have you seen? And if you're speaking to me, I'll be like, oh, well, we did a BSL, call option. Have you maybe go look at that? This is why we like it. This is how I'm drawing my lines. Right? This is how I'm doing my technical analysis, etc. And you could agree, you could disagree, whatever. And if you like the trade, you could put it into the competition, no problem. So you got your own personal trainer with you. Everyone here has years of experience to help you with your learning. I basically ran through all that. Now, in terms of the investment, you pay a deposit of $995, and there's 2 more monthly payments of $995. So the total investment of the program is $2,985, and that includes the 2-day workshop, right? If you can come face-to-face, fantastic. If you can't, well, that's just the reality of it. You get 2 months access to our online portal where there's a whole plethora of materials to help you with your learning, but to also help you with your trading when you're ready to go live, right? That includes your own personal trainer. It includes access to the options calculator, the software, everything that we use in order to trade this market. Basically, it equips you with not just the theoretical knowledge, but also the practical approach and also the support so that you can do this successfully. Does that sound reasonable? Now, if you'd like to come along and do this workshop, like I said, we only take in 10 people. We do have some spots available for the one coming up soon, right? COVID keeps throwing left hooks at us, right? You know, we have people defer for whatever reason, and so we've still got a few spots left for the 21st and 22nd of August, which is the Saturday and Sunday. All right. Typically, the investment of the course would actually be more expensive than this, right? It would be, well, I shouldn't use the word expensive because it's actually extremely reasonable price, but it would be about $1,000 more. But we're putting it at this price because there are a few spots there that we're trying to fill because of the deferrals that we've had. All right. So if you haven't learned about options, but you feel that you're, a sophisticated trader, right? You've got some experience, your ability to pick direction is not bad, and you want to take your trading to the next level, then you're welcome to come along and book into our options course. If you don't have any experience, this is not where I would start. I would come and look at our basic course that teaches you how to actually, well, it's about setting the foundations. It's about learning to pick direction, to learn about managing your risk, etc. Right? Those things are actually far more important to learn first than options. But if you feel like you've already got a good base and you actually want to learn what we think is the best instrument that you could trade with, then by all means, please come and have a chat to us. All right, we've gone well over time. We usually like to keep this to an hour. We've gone an hour and a half. I apologize for my tardiness, but Tim and I really enjoyed teaching about this stuff. We haven't done an options webcast in a very, very long time, so we're a bit out of practice. But you can see there's a lot to learn, right? I mean, with a subject like this, we're really scratching the surface. We've got to try and balance the type of knowledge that we have with what we can teach in a small period of time without it being too confusing. It's a bit of a balancing act. So hopefully you enjoyed it. We really appreciate you guys taking, an hour and a half out of your night on a Tuesday night to come and listen to what we have to say. If you are interested in any of the services that we provide, you don't have to do education if you don't want to. That's not necessarily what we're about. If you'd like to open up a trading account, you're welcome to. Right? You can open up a trading account, jump on some membership, get some trade recommendations, speak to an advisor, develop a relationship with that. That's what we're all about. Education is merely a stepping stone. We think you should be educated before you start trading with real money. That's just our opinion.
I'll
All right, guys, we might finish up there. Sorry, Tim, go on.
I'll just quickly add one more thing to the end of it, guys. Look, we've been live streaming these courses for about a year now because of COVID. Okay, so it gives people the flexibility to do face-to-face or live stream. So we have completely sort of altered what we do a little bit to really accommodate for that. So yeah, don't feel uneasy, guys. Look, it's still a really good process doing it as a live stream. You'll actually see Carlo talking. You'll be able to see what he's pointing to on his screen. We've really developed the technology out so it works really, really well. And the trainers are fantastic at what they do, and they will make sure that in those 2 months you'll understand all the strategies we teach in options there and how to apply them. Okay.
Absolutely. That 2-day workshop is really just a running start. I mean, the majority of the education is actually kind of done over that 2 months, right? Where you've got all those videos, the webcast, you've got your personal training, you've got the competition, you've got the trade recommendations, you've got all those resources. The 2-day workshop is really just a kind of like a boot camp. It's like a crash course. And as Tim said, if I came off a little bit negative, I apologize. The face-to-face is fantastic, right? But the online workshop is just as good. You've got Carlo's face there. You've got all the material there. It's like being in the room. And one thing that what we've said to people in the past is like, look, if you feel like you didn't get the full value out of the online session, well, once you're allowed to come face-to-face, you can come face-to-face as our guest, right? And, some people have taken it up because it's a good opportunity for them to learn again, but, others don't feel the need to because, they got exactly what they needed out of the online session. And then worked with their trainer over that 2 months to understand these things. Does that make sense?
Not many people take us up on that offer. They don't need to.
No, they don't need to. No, and I mean, taking a weekend I mean, it's a lot of learning. It's a lot of learning in 2 days, that's for sure. Anyway,
got a question there, Caro, from Chris.
Yeah, what was it?
So what does the subscription cost to join up with Trader Circle, and are there different package levels?
So we don't try to get too complicated. We're not one of those businesses that tries to upsell and upsell and upsell and upsell. I genuinely mean that our business is built on retention. So if we're able to turn you into a successful trader, and we're able to teach you and train you and support you and develop that good relationship, then you're likely to continue to trade through us, and that basically keeps our doors open. So we have we don't have our own technology as well, mind you. So it's not like we haven't developed our own software. We use Iris, right? Iris is a very popular piece of trading software, right? So we on-sell that to our clients. If you want to use it, we have a particular package for that. If you want to use the software, you don't have to if you don't want to, but we can link your trading account with us to it. So it's typically a good idea to. If you want the live data, it's about 120 a month for just the software, but you get it for free if you do 5 transactions. So what I mean by that is that let's say you open up a trade and then a few days later you close it, that'd be 2 transactions. So it's 1 trade, but because you're opening and closing, that's 2 transactions. So you do 5 transactions, you get it for free. Alternatively, there's the delayed data by 20 minutes, which is about $80 a month, roughly speaking. Right, depends if you pay GST. You got to talk to your accountant about that. It's about roughly $80 a month, and you get that for free if you do 2 transactions. So if you're on the delayed data, which in my opinion, if you're a beginner, is relatively fine, right? And you're just trying to keep your costs low. All you have to do is 1 trade basically, and you get it for free. We rebate you the $80. In terms of membership is just under $200 a month, right? But that includes market updates 3 times a day. We do a morning update about local, overseas, Asia, commodities. We did a full bits and bobs market update. I mean, we spend a good half an hour writing that. Myself, Tim, Sam, Ben, Jack, all of us are writing for that market update in the morning. Then we have a midday update, and then we have an afternoon update just to kind of keep you abreast of what's going on and what has gone on over the past 24 hours. We do the daily webcasts where you get access to those recordings if you're not able to make the session 5 days a week for an hour. We give you trade recommendations. I mean, that alone is worth $200 a month. You get access to training videos on options education, but as well as technical analysis, mini warrants, risk management, and a whole bunch of other topics as well. Reporting calendars, options calculators, warrant calculators. I mean, there's just a whole bunch of resources that we provide you for that investment every month. You don't have to have it to trade through us though. So we've got clients who've been with us for like 10 years or something like that, like a long time, right? Before my time, basically. And they still pay for membership because they see the value in it, and they want to keep going. A lot of people who come through our courses, after the 2 months is up, they usually continue on for a few months because they want to I guess continue using those resources. Some people don't though, and that's totally fine. Some people think, well, I've got this pretty under wraps. I'm trading fairly regularly. I don't need all those extra bits and bobs. I'm going to keep my costs low. What I'm going to do is just maintain a relationship with my advisor, whether that be Tim or me or one of the other advisors, and just trade through them, right? So you don't need membership to trade through us. You can call me up and say, hey, what's my BHP trade doing? What's my CBA trade doing? Should I close? What do you think, etc. We're happy to give you as much advice as you need as long as you're trading through us, because we essentially collect that fee through brokerage, right? And that's what allows us to keep our doors open. So I guess membership is really there for those extra resources if you want them to, but you don't necessarily have to have them. Does that make sense? Well, I hope that's answered your question. Are there any more?
Looks about it. Thanks for that, Chris. All right, guys. Thanks for attending. Thanks for listening in tonight, and we'll catch you all next time.
Thanks, guys. Thank you very much. Good luck and happy trading.
For now.